Hello and welcome to Crypto Weeklies. In this video, we are going to discuss XDC network and its token XDC. We'll be conducting simple moving average based accumulation strategy, dollar cost average based analysis, and um, time weighted average price based analysis for this token. None of the content is financial advice. We will also present estimated bull run target, which are again not financial advice. Let's get started. The reason that we are covering XTX is over the last 24 hours and 7 days. XTC has rallied by several percent points at 18% over the last 24 hours. Um, uh, and about 27% over the last 7 days, putting the market cap close to 1.5 billion, out of which 79 million is actively traded. And in terms of tokenomics for XTC, does not have a max supply, circulating supply at around 38 billion, out of which only 14 billion is in circulation, so more than half circulating supply is yet to be released. Again, that begs to question if the tokenomics are favorable. You can see this is one year look of let's say at a log scale. At one point the price was about 25% of the current price, and let's see at that point in time, that was at August 5th of 2024. Let's see if the market cap was also 1/4 of the current market cap. Market cap back then was about 350 million. Now it is at about 1.4, almost 1.5 billion. So if we divide 1.5 billion by 4, I can go over here. 1.5 divided by 4, about 3.75. So roughly speaking, although there are challenges surrounding tokenomics, the market cap and the price is so far growing hand in hand. So slightly market cap is growing at slightly higher pace than price, but again, that is expected for cryptos with such kind of tokenomics where more supply is yet to be released. So what does this crypto do? Again, it's a blockchain developed to support trade finance and tokenization of real world asset. It is an EVM or Ethereum compatible layer 1 blockchain, and again, it's a proof of stake based blockchain. And let's see if there are any information related to tokenomics over here. So let's see if they have anything apart from real world assets and trade finance related narratives going on. So doesn't look like anything else. You can check all of the narratives over here. On this is just one of the one of the many crypto coins tracking website, coin market cap. Again, there are others, CoinGecko and others as well. You can also utilize TradingView or any other tracking platform or any exchange for this information. But again, I just use this is again not a collaboration. So going back to XTC, and this is our website cryptoweeklies.com. Not just for XTC, we have machine learning based price forecast, analysis for top 100 cryptos by market cap, accumulation strategies, as well as TLDR, daily news, summarizer, peak value, or estimation of how much the bull market is complete, risk meter, narratives which are popular, heat map, as well as some of the portfolio builders, as well as estimated bull run target. We'll be talking about some of these features today in this video as well. Let's first go to XTC and XTC, sorry, and look at its current risk on SMA risk based model. This model looks at how the price is doing with respect to the 20-week simple moving average. If the price is too far gone away from the 20-week moving average, then the risk levels are high. If it's fairly under or too far gone down with respect to 20-week moving average, the risk levels are low. So this does not identify the actual bottoms, but again does a better job in identifying a range for bottom, as well as does a better job in identifying peaks than the bottom. So for example, if the hypothesis is only $2 cost average when the risk levels are less than less than 0.5 risk or 50% risk, you are essentially DCing only during these gray regions, and during these color coded regions, that's when you either halt DCA or uh, dollar cost average out of the market. Again, not financial advice, but this has a model has just from a utility perspective has been doing a decent job in identifying some of the overvalued phases of the market. And if you have this hypothesis, that again you get the point that even though the lowest point of the risk levels, they usually correspond to the beginning of the bear market and not the actual towards the actual bottom. To identify some of the range, again, what I have personally found is whenever there is a prolonged presence at least several months of presence in the risk levels where the risk is less than 20%, that's when DCA makes the most sense for most of the altcoins. Right now the risk level is, I think, at around 50%. Again, we can check over here. This is December 10th, today is December 11th, at around 56% per this model. And if you want to have a forward looking interpretation, if the moderate target, again, right now the price is at around over here at around 9.65 cents. The forward looking model says that between 10 cents and 12 cents, that's the moderate risk based target, when the risk is between 0.6 or 60% and 80%. 100% risk for the short term is between 12 cents and about 14 cents for XDC, sorry. In terms of the dollar cost average related model, this model does a better job in identifying the bottoms, also does a decent job in identifying peaks, but mostly geared towards identifying the bottom. So what I will do is get rid of these high risk levels, and this model, again, if the hypothesis is only to dollar cost average when the risks are less than 10%, again, especially since 2021, this model has done a great job at identifying those zones, as well as per this model right now the risk levels are slightly elevated at around between 20% and 30%. But again, this model takes cue from this regression based polynomial regression based analysis to calculate what is the risk at any point in time. Per this model, again, this is moderate risk target, risk based target for XTC is between 12 cents and about 18 cents, and the kind of stretched out target is between 19 cents and 21 cents for the coming weeks per this model. The time weighted average price model, the last model that we have, tells that based on this blue line, which is the time weighted average price, helps identify how long a particular token has spent at some of the key price levels. The current time weighted average price is at around 3 cents, and not too long ago the price was lower than the time weighted average price, and per this model, whenever the price is lower, sufficiently close to the blue line, that's when the DCA makes the most sense, where the risks are very low that they could be kind of rounded off to zero. Per this model, the risk is at around 72% at this point in time, and again the color code is in yellow. But again, you get the idea that in the pits of the bear market, when the price comes close to the time weighted average price, that's when this model provides its most utility. So something to keep in mind for potential bear market in 2026 or 2027. And for this one, again, we have a estimated bull target at around 23 cents based on what the regression risk, which is the DCA model that we saw, the time weighted average price, and the SMA risk at a summary level. The weighted risk is at around 42%, price at around 10 cents. The risk reward based price target is at around 23 cents, representing a reward of about 2.25x. And before we conclude, we'll look at how much of the bull market is complete at this point in time. At around 61.55%, it was complete on 8th of December, but again you can see that completion has taken quite a different turn, because this is not a linear completion. You can see even in the last bull market there were phases where the bull market was 44% complete, or risk levels were at around 44%, and then there was a correction. Even over here you can see at one point in April the indicator said 84% complete, but in late April that completion or the risk levels went down to 60%. And that again that at at this point again, from 61 risk level or 61% risk, we are back to about 51% risk after spending couple of days on those elevated risk levels. In terms of the sentiment score, now that we have more data for today, the overall sentiment score is 84%. There are a lot of bullish narratives in the market, but again couple of bearish narratives, but most of them are, if you want to read up on each of them, you can just hover over them. The titles are available over here of the articles and videos made over the last 24 hours related to crypto. In terms of analyzing the popular narratives, before we analyze narrative, we'll let it load. We'll look at some of the performance over the last 24 hours. We can see most of the cryptos are positive. That means there is some recovery in the market. 7-day performance, still most of the cryptos are down. To 30-day, most of them are up. 90 days, most of them are up. So that's where the market is. In terms of the narratives, again, the bullish sentiment is still back in full force. In about most of the narratives are still mostly related to Bitcoin. So relative size of the altcoin related narratives is less than that of Bitcoin related narrative. That means Bitcoin is still holding the market share. This is particularly important for cryptos such as XDC, where the nature is to rally whenever the altcoin narratives takes the center stage. In terms of the last analysis that we would like to show is, we covered the peak value, which was this. We did cover the crypto TLDR, which was the summarizer of the news. We covered the narrative cloud, which was this narrative word cloud. The last and the heat map that we covered over here. This is the heat map available on the website. The last that analysis that we'll do is compare the current risk levels in the market with some of the historical risk levels. Again, on November, sometime in middle of November of 2024, the risk went for, this is for Bitcoin, at around 80%, but now it has cooled off during the blow off top phases. The risk for both BTC and ETH goes to the highest risk band, that is between 80% and 100%. We haven't seen that. Again, ETH is a proxy to check how altcoins are doing. ETH risk is sufficiently lower than altcoin risk. That signals that the bull market has still not gotten over. You can see during the heights of the bull market, ETH risk outpaces Bitcoin risk. You can see over here, May of 2021, November of 2021. So those were the times where when ETH gets ahead of BTC, that's when and has reached the top of the risk channel. That's where we can consider that bull market is closer to completion. Again, we have other metrics to determine this, again based on peak values as well. So just wanted to highlight such indicators. So if you are interested in them, please subscribe and give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.